All right. So the the model that you have chosen, okay, the model that you have chosen shall be applied to the entire class of PPE. Okay, so to the entire class of PPE, meaning that not to all asset under PPE, but under PPE itself. Okay, even the PPE itself contains three types of asset: property, plant, and equipment. And then under this property, plant, and equipment, okay, we have different classes of asset. For example, okay, here. Okay, for example, here we have land, okay, buildings, plant and machinery, ships, aircraft, motor vehicle, furniture, and fittings of this equipment. Once you decide to adopt revaluation model for the land, all land, regardless of the types of land, it could be commercial land, non-commercial land, okay, it could be Malay reserve land, it could be any status of land, but we are going to put all of the land under one category, land. And once you adopt revaluation model for land, okay, regardless where the land is located, it could be in the middle of the jungle, okay, where we don't have any reliable fair value, okay, because revaluation model we should use the fair value. Tapi what if there is no fair value because it was deep in the jungle, okay? So tak tahu fair value dia apa. No problem. Okay, in the standard you will find way, okay, to substitute, okay, for fair value. All right. But once you adopt that model for that class of asset, then it applies to the entire class of asset. Okay. All right. Okay, so let's look at quickly on the cost model. Okay, so this one, okay, your friend already defined for you how to calculate the carrying amount of PPE. All right, and then you have to mention also, sometimes in the question, we are going to give you, regardless of the model, we are going to provide you with the fair value. Okay, just to test you whether you know or not, okay, what to do with this fair value. So in the discussion, sometimes you are required to discuss the accounting treatment. All right, so you're going to discuss about the carrying amount at the beginning of the year, then we provide for depreciation, okay, at the end of the year. If there is any impairment loss, then you have to mention about the impairment loss. If there is any addition of asset, then you have to mention about the addition of asset, replacement of components, and so on. Okay, and you have to mention also, okay, that any increase or decrease in the fair value is to be ignored or not to be made or not to be recognized. Okay, so that we know that you know when they adopt cost model, any fair value given, okay, regardless increase or decrease in fair value, we are going to ignore. We are not going to do anything. Okay, no accounting treatment for fair value for cost model. Okay, all right, and then depreciation is based on cost less residual value, okay, which is the depreciable amount. Okay, all right, so that's it for cost model. Very simple. Okay, and I should cover with you on depreciation, but I assume everyone already acquired, okay, already have the knowledge on depreciation. Okay, so we skip that one. Okay, revaluation model, okay, as given, as defined by your friend just now, the carrying amount is equal to the revalued amount less any subsequent accumulated depreciation and subsequent accumulated impairment losses. Okay, so make sure when you, if you're required to differentiate between these two models, okay, you mention about this one. Okay, so these are the keywords that we are looking for: revalue amount, okay, subsequent accumulated depreciation, and subsequent accumulated impairment losses. All right, and then the revaluation. So you have to come up with a policy, okay, for a company, okay, to make revaluation regularly, okay, depending on the change in the asset fair value. It could be every year, it could be every 2 years, 3 years, or 5 years, okay. So fair value of land and building usually determined by professionally qualified valuer, plant and equipment by appraisal, okay. All right, so that is the common practice in the business. All right, so what do we have from this revaluation model? Okay, from the revaluation, what do we get? When you revalue, okay, when you revalue your asset, okay, so for the revaluation to take place, you have to find the fair value, okay. So under revaluation model, you will have carrying amount, All right, and then you will have the fair value at the end of the year or at the beginning of the year. All right. Okay. So now your carrying amount is lower than your fair value. Carrying amount is larger than the fair value. Okay. So if the carrying amount is lower than the fair value, this is surplus. If it is less, then this is deficit. Okay. All right. So when we revalue, we have to find the fair value for PBE on the revaluation date. All right. And then what we are going to do next is to compare with the carrying amount. So how do we calculate the carrying amount? Revalue amount of if there is any revaluation made last year, okay, or last revaluation date. Okay, if not, then this carrying amount will equal to cost minus accumulated depreciation, accumulated impairment, loss for the first time lah, you kira. Alright, but then when it comes to the first revaluation, so you have to compare. Okay, after you calculate the carrying amount, meaning the cost minus the accumulated depreciation minus accumulated impairment loss, if any. Okay, and then you get the carrying amount. Then you compare with the fair value. Okay, so this carrying amount, when you compare with the fair value, if the carrying amount is lower than the fair value is higher, under the revaluation model, okay, you should increase the carrying amount to its fair value. So the increase, okay, the increase from carrying amount to fair value, we call revaluation surplus. Any decrease, okay, if the carrying amount is higher than the fair value, so you have to reduce or decrease the carrying amount to its fair value. So the difference, okay, the decrease is revaluation deficit. Okay, when you talk about surplus, when you talk about deficit, then we know that, okay, you are talking about revaluation. So this term is special for revaluation. Okay, all right. So now, okay, how to deal with surplus or deficit. All right. Okay, but before I forget, because sometimes students tend to confuse. All right, before I forget to mention you about this. Okay, for both model, cost model or revaluation model, okay, if you notice there is a similarity. Okay, for both model, we have to minus accumulated depreciation, we have to minus accumulated impairment loss. So what does it mean? What is it that I want to say here? Okay, so I want you to be aware that regardless of the model, okay, because sometimes when I go to the next topic, which is investment property, then the student, okay, started to get confused. Okay, so they get confused when they discuss about the revaluation model compared to cost model, ada yang akan bagi jawapan dekat saya, compared to cost model, revaluation model, we don't have to calculate the depreciation. Okay, which is wrong lah. Okay, why? Because in both definition of carrying amount, in both computation of the carrying amount for cost model, for revaluation model, okay, regardless of the model, okay, for MFRS116, okay, regardless of the model, for depreciable asset, okay, other than land, okay, all are depreciable asset, okay. For both model, we are going to calculate depreciation, meaning that every year we are going to provide for depreciation. So there is no difference in terms of that, in terms of providing depreciation expense every year. Okay, so for revaluation model, okay, revaluation model, now we want to talk about the accounting treatment. Okay, for revaluation surplus, for revaluation deficit. So this is an extract from the standard. Okay, this is an extract from the standard. Okay, so for Part 5 student, I prefer you to read, okay, direct from the original source, which is the standard. Okay, so that you prepare yourself if you want to pursue your study in degree program or professional program especially. Okay, all right. Okay, so if an asset carrying amount is increased, which we call a surplus, okay, as a result of revaluation, the increase, so what are we going to do with this increase? The increase shall be recognized in other comprehensive income. Okay, so the increase will be recognized in other comprehensive income. Okay, and accumulated, dan dikumpulkan in equity under the heading of revaluation surplus. Okay, under the heading of revaluation surplus. So any increase, we call that as revaluation surplus. Okay. All right. Okay. All right. Okay, so now I want everyone to imagine your statement of profit or loss and other comprehensive income. Okay, because now you are reading the standard, then we have to imagine. Okay, because the standard is not going to show you the illustration. So you have to imagine. Okay, so other comprehensive income. Where do we disclose other comprehensive income? In statement of profit or loss and other comprehensive income. Okay, kenapa namanya statement of profit or loss and other comprehensive income? Why don't we just come up with statement of income and loss or loss? Okay, so tak boleh. Kenapa? Sebab ada two different things disclosed in the same statement. Okay, so the first part of the statement is showing profit or loss for the year. Okay, any profit or loss that directly related to your trading activities. Okay, all right. And the bottom part, meaning that after you calculate your profit or loss, so you have total here for profit or loss. All right, for profit or loss. So you have computed your profit or loss. All right. After that, you will show your other comprehensive income. Okay, dia bukan di atas tapi dia selepas. Okay, selepas profit or loss. Okay, so dia kata shall be recognized in other comprehensive income. Meaning that when you prepare your SOPL and other comprehensive income, okay, after the net profit, then you are going to write other comprehensive income, and then you are going to list down all the other comprehensive income, which include the revaluation surplus. Okay, all right. And then accumulated in equity. So accumulated in equity ni di mana pula? Okay, in the statement of changes in equity, if you still remember, okay, you have many columns. Okay, and one of the column is for asset revaluation reserve. Okay, and then from the asset revaluation reserve, you have revaluation surplus. So daripada mana? Daripada ada comprehensive income. Okay, tunjukkan di dalam revaluation reserve. Okay, alright. Okay, next. What if there is a decrease, okay, in the carrying amount, because you have to reduce the carrying amount, okay, the carrying amount to the fair value. All right, you have to reduce to the fair value, so there is a decrease. The difference between the carrying amount and the fair value, okay, is the deficit. Okay. Okay, so how do we treat the decrease, okay, in the carrying amount, from the carrying amount to the fair value? Shall be recognized in profit or loss. Shall be recognized in profit or loss. Whereas for increase, you recognize in other comprehensive income. Okay, same statement, but different position. SOPL meaning that when you calculate your profit or loss, okay, this deficit is included in the computation of profit or loss. But whenever you have a surplus, okay, it is not included as part of your profit. All right, but you disclose after that. All right, so that is the difference between the treatment of surplus and deficit. For part 320, we are going to test you for subsequent years. We give you information for year 1, year 2, year 3, but then we ask question for year 3. Okay, so how do you treat, okay, or record, okay, the previous revaluation? All right, okay, so I have simplified everything into a diagram here to help you, okay, to help you to decide or to record, okay, in which account should I record this surplus and deficit. Okay, all right, so I put it here. I divide into two: initial revaluation and subsequent revaluation.